Good morning, everyone, and welcome back to the Mango Grove for your daily Bitcoin and market analysis overview. All right, so just a quick heads up, I have taken a turn for the worse. I am feeling like complete arse. Really should not be doing a video at all today, but hey, there is a lot of interesting things to talk about, a lot of developments, interesting developments to talk about today. So I do want to apologize in advance if you guys have to tolerate any sniffling and coughing throughout the video. I will try to edit those bits out. All right, so let's go ahead and begin. Today, I do have a question that I do want to answer very quickly from Flora Sora. We also have a interesting update on Bitcoin's weekly close, right? In regards to the cascading patterns that we've been talking about, Bitcoin had a deceivingly good candle close, and we saw the market react almost immediately, right? And yeah, I want to do a quick overview of the updates that we have on the dashboard. We got what we were looking for on the daily time frame. We're also going to go over a couple of interesting altcoins and what they've been up to, and an update on Bitcoin's volatility across the various time frames that we've been talking about. So with that, I'm going to zoom back up over here. Let's go ahead and start with the question right over here. Flora asks, when you say 50K and highlight 40K, do you mean to say 40,000? I noticed that you did this in your earlier videos as well. Now, the reason I say 50K and I highlight 40K is, well, two reasons. One, I do think that we need to start beginning to get into the cautious state once we do start reaching the $40,000 region. Now, remember, guys, this is assuming that all our triggers hit. We have a bunch of triggers that need to get activated before we can even look for that big move to $40,000 to $50,000 region, right? We don't have them just yet. We did have something interesting develop on the, I would call them sub triggers, right? Let's call them sub triggers. We did get a nice weekly candle close that kind of activates the mini pattern that we are looking for, and we also did get a nice signal on the dashboard on the daily time frame. So we got a couple of sub triggers, but none of the big triggers. So I just want to pretend to that before we get excited and get ahead of ourselves looking for those big numbers. But at the same time, I like having us always thinking about the bigger picture so that we're ready for those big emotional moves that people tend to get blindsided by, right? So why am I marking at $40,000 and also talking about $50,000 as our target? Well, $40,000 is where I do think that we should begin to get cautious, because that's where the resistance zone begins. And if you get, it seems like you've been watching the videos that I've been posting recently, but I'm not sure whether you watched the video, I think 3 videos ago, right, where we talked about the Bitcoin cyclical analysis, where we went through the Ichimoku as well as the Fibonacci confluence, where we said that, hey, we're looking for a move to the top of the cloud, like right over here we did in 2015, 2016, and as well in the 2019, 2020 cycle. And we're looking for something similar to happen this time as well. So each time, right, and we're going to go through the charts again sometime this week, perhaps towards the end of the week, I'll do another cyclical analysis. So again, this time, we're looking for something similar, a move to the top of the cloud, which starts at around $40,000. But each time that Bitcoin has done that in the past, it has poked its head up to the 0.786 Fibonacci zone, right, which is coming in at around $50,000. So what I'm doing, guys, is I'm essentially marking out this entire zone for us to be cautious at, right? Because this may seem like a big zone, like a $10,000 zone, but bear in mind that that's exactly what we did in the last move, the last cycle, where we jumped from $3,000 all the way up to $14,000. And again, over here, the zone between around $40,000 to $50,000 is about 20%. And again, 20% may seem like a lot, right? But we have to keep in mind where we are coming from. And we are coming in from a low of around $17,000. The move from around $17,000 to around $40,000 to $50,000 is a good 200% move. So relative to where we're coming from, 20% range is not that much. We are looking far, far ahead of ourselves at the moment, right? We need those triggers to activate, and things may change in the interim, okay? Things may change in the interim. In fact, today I'm going to be introducing another trigger, right, for you guys, right? This is going to be an actual trigger, not a sub trigger, an actual trigger. So we talked about a couple of triggers already, main triggers. We talked about how we're looking for the Tenkin to be a guiding light, which is coming in at around, I believe, $19,000, right? Then we're looking at the weekly 200 moving average, right, which is coming at around $24,000. But we're going to be looking at a trigger today, which is a little bit before the Tenkin, right? So you guys might be a bit excited for that. Alrighty, let's do a quick overview of what's going on the dashboard. We did get what we're looking for on the daily time frame. I should mark this out as the daily time frame. This row over here that I copy pasted for you guys is the daily time frame. So if you guys remember in the previous video, this was still neutral. We were looking for it to flip long, and we did get that. We got it 5 hours ago. So this morning, Bitcoin has flipped long on the daily time frame as well. Do keep in mind though that the higher time frames, the 2-day, the 4-day, and the weekly are not long yet, right? So we're looking for that cascading trend to begin, and this is really promising. Okay, and we do have really nice volatility too. Volatility still blue, still low. I really like that for Bitcoin. Okay, so moving on over to a few altcoins. I've been getting a few questions on Gala and Solana especially, right? And people tend to ask the most questions when coins move their most. If you guys do look at Gala right over here, we have moved 147% already. Solana has moved a good 42%. And this isn't what they've moved in their entirety. This is what they've moved since you got the long call on the dashboard, right? So you got the long call on Gala and Solana 7 days ago, so like a week ago, right? And if you had taken the trade as soon as you got that long call, it would have given you a good 150% and 42% in total. But these two have both moved more than that, right? I think Solana has moved a good 85%, and I'm not sure about Gala though. I'm not even sure what this coin is about. Let me know in the comments down below. I'm really intrigued. All right, so both of these, right? I've been getting questions on this, and when you guys are uncertain about whether you should be getting into a coin or not, don't let your emotions make the decision for you. You guys should have a set of objective rules that allow you to decide whether you should be getting into a trade or not. So what I like to do is quickly look at the volatility of a particular coin that I'm interested in on the dashboard, and if the volatility is red like it is for Gala and Solana, Gala sitting at 100 and Solana sitting at 89, if the volatility is red, I'm immediately going to either one, reject it as a potential opportunity and look for something else, right? Or two, I'm going to look at the chart and look for resistance levels. Okay, that's going to be the first two things I do, right? Because red is immediately a sign of, hey, be cautious. It's a warning sign. You could be buying into resistance over here. Okay. At the flip side, though, that doesn't mean you should be not looking at any trade whatsoever. If there are coins that have begun their trending move, right, there could be other coins that want to begin their move as well. Right, so look at Ethereum, for example. Ethereum has moved up only 9% since you got the call 7 days ago, and the volatility is still pretty good. It's orange, right? Not looking too bad at all. Not in the danger zone whatsoever. Now, Bitcoin is looking even better. The volatility is still blue, right? So Bitcoin's volatility on the 12-hour and on the daily time frame is looking really good. Okay, now this brings us really well to what we have going on over here. Okay, so what I've done over here, guys, is I've essentially taken the volatilities for each one of the time frames for the 4 coins that we're looking at up over here as well, right? So we're looking at Bitcoin, Ethereum, Gala, Sol, and I have the volatility marked out for the 4-hour time frames, the 12-hour time frames, and the daily time frame. You guys can see that Sol's volatility across all time frames is red. Same story for Gala, red and red, right? It's telling you that across all of the lower to mid time frames, you need to be a little bit more cautious. Look for resistances across those time frames, and we are most likely going to be seeing a pullback, allowing you to buy in at better prices. But you still want to see these volatilities come down. You want to see the wall on the 4-hour and the 12-hour time frame begin to reach the orange zone and the blue zone preferably, right? Because what would that mean? That would mean that you're reaching a consolidation phase after having a big move like this, right? We had a 150% move on Gala, a good 50% move on Solana, right? So you want to start seeing some consolidation. It'll make the trade a lot easier for you to manage the risk, right? If you insist on trading Gala and Solana, even with this volatility, you need to reduce your position size. Now, if you guys are on the Mango C program, simply use your MRM indicator. right, with the tool sheet, it will adjust your position size, etc., for you, right? It will take into consideration all of this for you guys. So yeah, just be safe and don't trade without this, especially since you have access to these tools. Use your edge, and I've told you guys multiple times, 90% of my edge comes from my risk management tools. Okay, now I want you guys to look at what's going on over here with Bitcoin. Okay, you can see the volatility on Bitcoin on the 4-hour time frame is red, which means that on your lower time frames, you can have a pullback, but that pullback is coming on over to higher time frame, low volatility, right? Because 12-hour and daily are both low volatility, and higher time frame trend support, right? When I say trend support, I mean that the high time frame, the 12-hour time frame is long, and the daily time frame is long as well. We just got the long on the daily, right? We got the long signal on the daily, right? So just by looking at the picture on Bitcoin, I am seeing that, hey, the 4-hour is red and giving me a warning sign, yes. So I can look for a pullback on over to support, giving me a potential trade towards the upside. All right, so to best illustrate how to use the dashboard data along with your charts, I figured it'd be best for us to switch on over to the charts. And we're looking at the 4-hour time frame over here, because remember, the 4-hour time frame wall is high, while the 12-hour and the daily wall is low. Okay, so we're going to start with the 4-hour time frame. And you guys can see that we have our falling wedge, as well as our ascending triangle that we discussed in the previous video. We're going to get back to this in a bit as well, right? Because it all connects. You're going to see something really cool over here. But let's go ahead and talk about just our lower time frame for now, okay? What I'm going to do is I'm going to go ahead and hide our ascending triangle as well as a falling wedge, okay? And we're going to focus on only what we're seeing on the lower time frames, because you guys can have the bigger time frames at the back of your mind while still trading within the lower time frames. You guys are going to see that a lower time frame trader may be taking the complete opposite trade as you are, right? If you are bullish, you might be bullish on the weekly and the monthly time frame, but somebody else might be bearish on the lower time frames. That doesn't mean you guys need to disagree with each other and hate each other because he's a bear and you're a bull. No, he's just looking at a different time frame, a different indicator. You guys can both be right on the same day, right? So don't get into that bull versus bear mindset, guys. Understand that everyone can be right depending on the trade that they're taking, time frame, etc. So anyways, going back to what we're talking about, remember, I'm going to go ahead and draw it out over here really quickly for you guys. If I can find my drawing tools, 4-hour wall was high, right? So what do you look for? As soon as you see high volatility, you look for your resistance levels, right? And that's exactly what we had over here, right? You guys can see we had a resistance zone. Just to quickly mark out, show you guys how I mark this out. It's really, really simple. Cloud theory, guys. Just simply mark out the top of your cloud. Right over here, the top of the cloud, the flat of the cloud. You can also take this edge point right over there. You see the peak of the cloud? Okay, let me go ahead and just zoom in for you guys. That peak there, that is a level that you can mark out to get your zone. Now, you don't need to mark it out a zone. You can simply mark out a horizontal right over there and keep your life simple and easy, and it's still going to work, right? But if you want to get a lot more precise and trade to the exact decimal points, you can like do these little nitty-gritty things. Now, I do it, but that doesn't mean I trade exactly over there, right? I'll still trade in the middle of the zone. I don't want to get too nitpicky with my entries, right? So this was a really, really good short opportunity, a good scalp that I actually did take. And remember what we've been talking about over here for years now. After a breakout, you look for the first pullback into the 10 SMA, and that is usually a really good buy opportunity for another scalp or potentially building a longer term trade on the higher time frames. Over here, we had confluence with the Tenkin as well. Also, the cloud have flipped green, right? So you had cloud resistance, your red cloud resistance, right? Your prior cloud resistance coming in to give you that level to take your scalp out of. Then you pull back down to your 10 SMA. This is one of our trade strategies. You guys should note it down in your trade book because it is a high probability, not certainty, high probability trade. And if you lose a 10 SMA, simply get out, right? You had confluence over here with your Tenkin to play your trading the wing strategy as well as the cloud green, right? So again, this was a beautiful trade, right? You had Kumo twists, resistance, likely to see the pullback into support, Tenkin 10 SMA over here. If you did lose your Tenkin 10 SMA, you look for support to come in at the 21 EMA, which is likely in between the Tenkin and the Kijun. So yeah, this is just a quick example of how you got your high vol fall signal on the 4-hour time frame, you immediately look for resistance. You see the resistance. You could take the trade short, or you could simply wait and say, hey, you know what? I'm likely going to get a better bid on my long trade, my long bias, right? That maybe you have a rule that says as long as the cloud is green, I'm only trading long, which, by the way, is a really good rule to have, right? And since the cloud turned green, you don't want to be taking shorts, but you don't long here either because you have your resistance and the dashboard is giving you a high volatility signal. All right, so now let's go ahead and do a quick update on our cascading pattern, which, by the way, ties into what we just discussed on the 4-hour time frame and the weekly close that we just had. So just a quick overview on what we discussed in regards to this cascading pattern. We have our falling wedge over here, which broke down, right, but did not see continuation. Instead, we saw a ascending triangle, or rather we are seeing an ascending triangle form underneath the falling wedge, which may lead to one of my favorite patterns, which is essentially a falling wedge that fails to break up, but instead breaks down, doesn't see continuation, and then breaks right through the top of the falling wedge instead, right? We saw this in the past, one of our favorite patterns. Bitcoin has had some strong moves with this pattern, so hoping to see something like that again this time around, provided we see our triggers. So this ascending triangle that we're forming underneath the wedge over here has a measured move that we marked out, right? That if we go ahead and plot it, actually points to the top of the falling wedge, confluencing with the Tenkin. Remember, our weekly Tenkin, which we have established is going to be our guide for that big move to first around $25,000 and then potentially to around $40,000 to $50,000, right? Our weekly Tenkin was our guiding light for that, right? Before we even talked about the falling wedge. Then we saw in the next video that, hey, the falling wedge is confluencing really well with the Tenkin, which is also the measured move for this ascending triangle. Now, the cascading pattern is essentially us breaking the ascending triangle, leading into the Tenkin. If we close above the Tenkin, remember, this is a weekly time frame, guys. So this is going to take some time to play out. We see weekly candles above the Tenkin, we would have officially met the measure move of the ascending triangle, as well as broken this falling wedge, triggering a potential C-span trade between the Tenkin and the Kijun. Now, the measured move of this falling wedge, by the way, guys, is right over here, which is again the base of the falling wedge from these candle closes to these candle closes. Don't need to get too nitpicky with any of this. We are seeing that the measured move is pointing perfectly to around the 200 moving average region, right? Okay, so that's a quick overview on what we're seeing over here. So the first big trigger, or rather sub trigger, would be us actually breaking the ascending triangle to the upside. And what do you know? Let's go ahead and zoom in. Let's zoom in. This weekly candle close had a very, very subtle bullish close, guys. Deceivingly bullish. We closed right above it, right? Very easy to miss this if you didn't zoom in and mark out the candle closes properly. You can see that the market reacted really well to it. It came in, retested the level, and saw immediate continuation to our falling wedge, our lower resistance level of the falling wedge. Now, keep in mind, by the way, guys, I think this is complete fluke, the fact that we hit this the bottom of the trend line, because I could have drawn this trend line in countless number of ways, which is why I do not use trend lines as a primary tool. I use them as secondary tools just to visualize structural trends, right? So I think this is just a coincidence, but it's cool to look at nonetheless. But what's not a coincidence is the fact that it lined up perfectly with our 4-hour Ichimoku resistance that we just looked at, right? So if you guys do remember, around 2 minutes ago, we were talking about how we had a zone of resistance somewhere around here, right? Wait, not like that. It was more like this. So you're beginning to see the interplay between time frames, right? We got our weekly, right? We got our weekly break above the ascending triangle, but that doesn't mean that the lower time frames have to move in a straight line, because even though the weekly may look like this, guys, within the weekly, okay, let me go ahead and draw it. Within the weekly, we'll have trends, right? We'll have a trend on the lower to mid time frame. So now that we got our break above our ascending triangle, we can start looking for those resistance levels to be overcome on the lower to mid time frames. We're already seeing one of those resistance levels being contended with, right? The 4-hour Ichimoku level that we talked about right over here, okay? As soon as we reclaim this level over here at the top of the cloud zone that I've marked out, that's going to be a good sign for the lower to mid time frames. However, I want to show you guys one more trigger to add to our checklist before we wrap up this video. And that's the 4 4-day time frame dynamic. All right, so we're looking at the 4-day time frame over here, guys, and I have the dynamic opened, and you guys can see that it's been an extremely winning strategy to just stay bearish and short underneath the 4-day dynamic. So for example, right over here at around 56,000, if you had flipped short, you would have caught this entire trend all the way here, exit over here, perhaps even flip long. As soon as we close underneath the 4-day dynamic again, flip short, and you got your retest, a big move towards the downside, thrusted up over here, rejected, back down, up over here. And by the way, over here, I actually flipped long. I decided intentionally to trade against the dynamic to my detriment. And what happens? The big FTX scandal, right? So yeah, that was a hard lesson learned, to not bet against the 4-day dynamic. Now again, it doesn't mean that it needs to get everything perfect, right? Right over here, we are hoping for this to break. This time we are literally hoping for this to break. This is in the middle of the wedge. But what I'm trying to say is, do not get too excited until we break it. Over here, I got excited because almost all of my triggers had hit long for this move towards the upside to around $25,000. So I wanted to take that trade over there, but the 4-day dynamic had not triggered yet, but I took the trade anyways, and I paid the price, right? So learn from my mistakes, guys, and you guys can, if you guys don't have the dynamic, simply take a screenshot of this, right? You guys can see it over here. The upper zone is coming at around 18,500 as of this recording, and the lower zone is coming in at around 17,940. So if we do break that, that's going to give me that much more confidence for us to overcome those weekly levels as well, and perhaps initiate that move towards the weekly 200 moving average. Okay, guys, I am so sick today. You guys have no idea how many times I had to cough and sneeze in the middle of the video, but I tried to do my best. I hope you guys enjoyed it. Please let me know in the comments down below if you guys have been enjoying the series that I've been building for you guys, the story that I've been putting together. I have so much more that I do want to talk to you guys about, pieces of the puzzle all coming together. Let me know in the comments down below. Your comments have been motivating me so much. I hope I can get another video out for you guys this week. I hope this doesn't get worse. See you in the next one, guys. Ciao.